I wasn't, Ludwig, but I am now. Okay, welcome back, everyone. So I started with SPX today, and reason we got this 1, 2, 3 pattern, which is not textbook, but it meets the definition of a 1, 2, 3, meaning wide range bar up, a gap. That was the gap up, and then the inside bar with the little bottoming tail bar right at the top of the range. And since the S&Ps are up here a bit, must be taking it out, which says now this pattern says it should keep going higher. So we shall see. With that being said, the fact that it's supposed to be going higher, I would say SPX, if you're adventurous, what's today? Today's Friday, yeah. Adventurous below 3,600. I know it's a little tight, but a little bit more cautious if there's premium below 3,560-ish. Okay. Of course, this pattern should not come down and close under that green bar. Right? No premium today, short day. Okay, so forget that. Let's go to the futures. And interestingly, there's something wrong. I don't know if you guys are seeing this or if it's just e-signal. I'm getting this double bar here on my charts, which is kind of weird. And 36.40. We've got room to keep going up to 36.55. So I will look for some type of maybe pullback to get long, since we've got this break of the low in the W type of a bottom here and a continuation pattern. Now it is at an area of resistance. I see that it's just poked above it. That doesn't mean I want to go long here, not without some kind of additional information. So I don't trade off of the hourly chart. I look where support and resistance is and then trade it off of the 5-minute, which is supportive of thinking that it's going to go up. So I'll keep an eye on that at the open. The Qs are up here leading. And again, this little double bar there. And I've restarted it 3 times, so I don't know what's going on. It's got resistance there. This has been the laggard, but it's been playing some catch up. So potentially, I'm just pulling in some more data here. It's going to do that for me. No, it's having a little heart attack. I pushed it. All right, this has got plenty of room to go up. Yeah, I don't know, Mark. Something going on there. It could be. Anyway, I like the look of this. I don't, the S&Ps look okay. It's supposed to be a bullish day historically. We'll see what stocks are doing, but I like this pattern. It's got a nice amount of room to continue to go higher. A little extended here, short term. Wouldn't be surprised to see some jiggles here at the open. But that looks good. You got the down with the double bars there. This underperformed the other day. Dan, we know internals do not give us pinpoint turning points. So there's nothing to say that the market is going to turn today or tomorrow. The question is, do you have a pattern on the spiders to go swing long? So we've got this 1, 2, 3. This is the 3rd time up there, up at the highs. And if it trades above here, stop below there, see what happens. It's a lot different than buying down here with the internals with a bullish signal than buying up here with the internals with a bearish signal. That doesn't mean it can't go up for 2 more days or what have you. No, it's just information that risk is rising on the long side. There's no doubt of that, but it doesn't mean it can't go up. So that's a choice. You put in your stop and share size it, and you could even put in a smaller than what might be the normal position because of that and see what happens. I showed you the internals last week. All right, we can see we've got an outright sell signal there. I can't do that sideways. But sell, and these are very accurate. Sell doesn't mean that, okay, run for the hills. I've seen these things take 2 weeks to put their claws into it and the markets go higher. So on the other hand, I wouldn't expect it on a shortened day where, so many people are away. If today was to close like that, it's a problem. You had a red bar. We're not getting a gap down. So I guess it would have to be, if you had something that looked like that, it'd be a problem. I don't know if that's going to happen. Historically, it's a bullish day. So we've been saying that for weeks now because the history is that's what it is. And pretty much things will be done by 11:30. That's typically the way it is too. And the last holdouts kind of hang in there till 1 o'clock, and maybe you get a flicker into the end of the day. Russell just hanging out here. That underperformed the other day. Kind of just downward sloping kind of a move. Still bullish on the daily. Excuse me, wide range bar there. That's a monthly. Why am I on a monthly? I always look at the weekly. So that looks good. Coming up to a whole number. Maybe it's going to go to 2,000. This doesn't look right. 1846, 1846.50. That's right. Interesting. No, a little messy there. Still trending up. This would not be my first choice to be a buyer. Qs look the best. Holding up here. It's got room to run up there. So Qs are spiders. The Dow. Whatever. Bonds are up here a little bit. Just a big mess there. They're trying to make the bottom, near support, trying to make the turn. Trying. Good morning, turn. Look at oil, right? Popping up there, clearing the high. Good sign. Right? Little gyrations going on here, pre-market. There's those double bars again. I guess they'll clean that up eventually. Gold getting whacked. It's interesting, right? Dollar is going down. Keep an eye on this scenario here. We'll see how this unfolds. We're selling off. I'm wondering, like, is they're waiting for the last determination on this election thing, but you figure their stimulus is coming one way or another. That would suggest, right? You're printing money, inflation, but interest rates, if they start moving lower, we'll see how it all unfolds. Things are not clear just yet. So far, you can see the 10 years kind of pulling back to where buyers should want to step up here. We'll see. We'll see better next week. And the transports, there's in a nice uptrend. I mentioned the other day, Dow theory, buy signal, transports at a new all-time high. Industrials at a new all-time high. Had that little poke above 30,000. And as mentioned, internals saying, be careful. Everything was looking a little too good. All yours, Dan.
Yeah, hey, happy Thanksgiving, everyone. Hope you had a great holiday. And Greg, as I've been talking the last couple of days of both personal observation of frothiness, bullishness, at least in the EV sector, and then CNBC, I've been summarizing some of the people just parading out there saying everything's perfect, nothing to worry about. Uh, they had this Harvard businessman, what's his name? Stiegel or something or other, the old guy. Hey, Dean, your drop down.
Jeremy said 36,000 about 20 years ago. Now I was saying, oh, Jeremy, he knew.
Yeah. Also, what's the guy that wrote the book? The control. Shoot. Oh well, so remember it later. But anyway, I mean, there's more people on TV. It's like, yep, all these things. Yeah, Jeremy was saying fundamentally, yep, these things that Biden's doing this and that. Isn't it so funny? We like to talk about human nature because that's an integral part of what makes markets move, their sentiment. And do you remember just a couple months ago, the media just had everybody program Biden victory, market's going to tank, taxes and regulation, and politics. And now everyone's singing a different tune. It's it is what it is. So anyway, my point is, yeah, the excessive bullishness there, and Greg gave a fantastic explanation of the yellow. It's a yellow light right now. So buying here is different than when we have a climactic VIX, and then in support. So yeah, one woman announcer on VXX or VIX today, she was saying, yeah, I guess it makes sense that volatility is going to start coming out of the market because it looks like Trump's going to concede the presidency. And my first reaction was, start coming out of the market? Where have you been, lady? Look, it was 28. Look, it's been coming out. Oh well, so we have a.
By the way, he didn't say he's conceding, and yesterday he actually said they're not stopping.
Right, but he said if the Electoral College, moves forward, and then there was an article on the front page of the Journal today also that they were, I'm just paraphrasing, but they're like, hey, the scenario of tanks on the street and civil unrest and all that is not playing out, so that's obviously a positive, which it is. Nobody wanted to see that scenario. All right, we got a ton of opens here, so we've been taking advantage of this. We got a dozen open trades in the weekly advisory. They're all bullish with the exception of 2 call spreads. Workhorse, when it's flat, so we're going to make some time decay over the holiday, and also Penn. We have a call spread, and it's gapping down a little bit, so that one's fine. All the others are bullish. 2 of them will expire at full profit today, and the rest are from next week. They look great. We got 22 open trades in our swing and options trader, and they are all fine with the exception of Riot. And that's what I just sent a post out. We entered it as a core trade with a big stop down here. So, we just got to sit through this. So what do? We'll sell a call against it. Actually, Greg, I said buy Twilio over the high. I posted that on Wednesday. Let me go ahead and cancel that because of the gap. So Adobe, we're going to hold off on. I'm sorry, shoot. Yeah, Adobe. I'm sorry, Twilio. Twilio, we're going to hold off on. But I posted IPOB. I did that yesterday when I was scanning a little bit. And I also posted Intel. And I also posted not Workhorse, XPEV as a call spread. Let me show you that one. See, even on holidays, Greg and I are always looking at the markets. So Intel, this is a 1, 2, 3 from a big W bottom. It's a bullish pre-market gap, so that looks great. And X, you know, we were talking about the sentiment and all these climactic sell setups from last week. So under Wednesday's low, I like this as an out of the money call spread. Even though this one actually is stronger than some others because it had multiple consolidations on the way up, as opposed to something like, you know, Aurora going straight up. Aurora, wow, actually looks like a long here as a day trade. That's a bullish 15-minute chart right there. All right, so any questions on our opens, just ask me, but they're all fine except for that riot. And I think the news there was, I heard someone on CNBC. Remember when Bitcoin got back above 19,000 the other day? Do any of you remember what I said? Breakout failure there. I said that looks like a short-term top. I mean, it's a weekly climactic sell setup. And so I think that's what's hitting Riot. I don't know, I just heard out of one ear, Coinbase might be doing something. IPOB will almost, yeah, IPOB, that's a wide range igniting. So let's see if we can sell an out of money put. 5-minute, Colette, I don't know where you keep getting this 15-minute rule from. I've clarified it for you a couple times. It's 5-minute high, provided it's not excessive. And we have our trading rules, trading the open and trading gaps in a document, a members area. Look at cousin IPOC. Yeah. It's you know, lagging, but it's the something bar. And you know, I said the same thing with Aurora. Do you all remember Aurora down here? That's the day we got into this. And I specifically said, EV sector is rocking. I said, I will pick up garbage laggards in the sector if I have a pattern with the expectation that they'll play catch up with the Robinhood people using them as toys. And that was a perfect example. So we got in on the perfect day. And could IPOC, I don't know why it didn't rally with his cousins for the last 2 weeks. So that's a red flag. But yeah, if you're wanting in it, today's the day. Mesa, no, you missed the train on that. You know what? I remember some people saying they were selling right here. I'm like, what? I mean, that's a consolidation after breaking out on the weekly, monthly. But I don't know what you want to do with that now, McGraw. I'd be selling into that gap. All right, let's continue with gappers here. This looked like a penny toy rocket ship. Nothing to do with it now. Well, you know, we'll see if he'll calm down. And back. I lose my pre-market data. Yep. Yeah, there you go. All right, so that's a bearish gap, deep. Look, it's under 18 bucks. All right, so that's over 50% bearish gap. It's on horizontal support here on the 15. But if it cannot bounce, then that's a 30-minute low day trade idea. Because it's, you know, if this, do you remember we talked about end of day base versus end of day declines? Just hypothetically, you know, this went sideways here and sideways here. But just hypothetically, if it was just a steady rally into the all day long, then we wouldn't have any support points to the left, and it would be an even better short. And Knox, yeah, we have a short put on that. I'm not sure what you want to do with it now, Jake, but it's bullish. And there's another wide range igniting. And that came from one of you in the room. I remember it clear as day. It was right on this 1130 bar, right there. And it was kind of extended when we saw it. And that's why I didn't do the stock. I didn't do the stock, but we sold out of the money put spread. AEO, yeah, IBM were AEO. I'd like it to go sideways a little bit more. All right, Mark, hold off on those. Let me get James here because it's something expiring today. Yeah, we're long stock from Tuesday, or half lot that is. And then I did say to people, you know what, you can do a 290-300, which at the time was risking 5 to make 5 with positive time decay. But the problem you have now is, what do I do with it? And we talked about it on Wednesday, but sure, let's do it again because it's expiring today. So what do I do with this? I have a mildly bullish directional option trade, which is a bull call debit spread that expires today. What do I do? Do I just want to close it out at a loss, or do I want to roll it? Those are kind of the two biggest questions. I personally only roll if I like the trade. Now we're in it and we've share size for it, so it's fine. But I ask myself, would I put on a bull call debit spread right now? The answer is no, I wouldn't. Why? Well, because it broke out, pulled in, red bar, overbought market, and it doesn't fit my checklist. So if you were to roll it to the same strikes, the 290-300, I already looked at the numbers because somebody else emailed me. Might have even been you, James. I already answered this in an email this morning. And I said it would be 100% extrinsic value. And based on Wednesday's closing price, the debit was 315. Would I recommend putting on an out of the money bull call debit spread on this pattern for next week? Absolutely not. So in order to get positive time decay, you would have to buy a deeper in the money one and sell an out of the money call to do that. But the downside of that is you got to pay a debit. So it boils down again what I started with. Is this a pattern that you want to put on a new debit spread? All right. So James, is all of this helping you with the thought process? So my end conclusion or recommendation is, if you're long the stock, we've share sized for it, I would get out. I mean, I'd keep it, maybe even leg into a covered call. But in terms of rolling the option trade, not me. I would try to just get out on a bounce and minimize the minimize the loss. With the gap up, at least it's in the money. All right. PFT, SFT. Jake, again, tell me what you want to do. There's nothing there for me on the daily. I had a big old explosion bar Wednesday. It's a big gap up. It's run from $7 to $10.50. It's just okay. Then I mean, I don't know based on what, but based on what we teach, the answer is no. There's no pattern. Remember, that's unless maybe it sets up on the 15-minute chart by going sideways for 30 minutes, then we can talk about it then. But as of right now, it's not my wheelhouse, not my approach, not my setup. Mas, what are you asking? McGraw, Masabai. I don't know. I mean, it's up 8 bars, wide range ending, bearish. Yeah, maybe it's a day trade, but that ain't my wheelhouse to go long unless you're doing it as a breakout on the weekly, in which case you need a big old stop under last week's low. Yeah, AAL, yeah, it's extended daily, Arun, but that's a beautiful 15. So Jake, compare whatever that thing SKT you just asked me about. I would 10 times rather buy AAL right here. 10 times better because it's a 2-day consolidation, bullish pre-market, not extended. This is superior based on what we teach than SKT. Twilio. Well, Ed, I actually said hold off because the gap looked excessive, but now on the daily, it does not look excessive. But yeah, Ed, the rule is always wait 5-minute high. Yeah, this is one that Greg posted on Wednesday, or I made it official. I like the pattern. But yeah, Ed, we always wait 5-minute high. But it looks good. Yeah, nice 180 engulfing reversal. Well, Ed, it's to the advisory letter. I'm not sure if you get the advisory letter.